Okay, let's dive in. Stock market technical analysis. We're going to use the charts to tell us where things have a probability of going in hopes of finding some good trade ideas and making some money. So if you're new to the channel, stay tuned. We're going to go through the general market analysis. We're going to look at individual trade ideas and kind of talk about where we're at in the market right now. Again, as I go along, if you guys are interested in learning the skill set, check out the technical analysis course I put together. It's about 4 to 5 hours of video training. It goes through all the different concepts from money management, trendline analysis, divergence analysis, all the things I talk about in these videos. And I only charge $99 for it, so it's pretty good value. Check it out, link in the description below. All right, guys, to start us off, we got the Fed coming out tomorrow. A Fed announcement. They started their meeting today and they announced tomorrow. Again, I'm a pretty firm believer that this market over the last few years has really only been trading on the Fed and what, anticipation of what the Fed's going to do and then reaction of what the Fed actually does do. So it's a very important meeting tomorrow. So I do expect the markets to kind of go into a holding pattern where they're just going to grind around. It's going to be a chop fest, and that's what we've seen so far today is just the market's kind of chopping around. So keep that in mind that, any kind of breakouts, breakdowns, anything that really occurs today and tomorrow, really, especially right before the Fed, is likely going to be a false breakdown, false breakout, whipsaw moves that are going to, whip you around. So keep that in mind. Now, in the short term, I have a slight bias towards a continuation of the rally that we saw yesterday. And then looking on the hourly chart on Qs, you can see that we basically broke down, reversed, and today we gapped down right to that support level, which is about 342.40. And we're bouncing off of that and rallying up to probably the gap fill, 352.59. I'm thinking that post-Fed, we could probably rally all the way up to about 360 area, maybe even up to the 200-day moving average on triple Qs, about 365.70. But again, this is the area right up in here where I would be looking really even down to here at 361, where I want to reestablish my short positions for the longer term and larger trend, which is down. All right. So if we go to the daily chart, we've clearly started a downtrend. This move down recently just took out this former low. Okay, so we have a lower low now. So on this bounce, I'd expect we make a lower high, but and ultimately continue the downtrend. All right, so I'm looking for a slight bounce on the markets, and then I'm going to recycle back into my shorts. Now, if you're if you're really not trying to zig and zag with all the little gyrations and the day-to-day, then I would prefer to just stay short, in my opinion. I think we are going much lower, but we could have a rally here and then head lower in the next coming days to weeks, basically. All right, so that's really what I see on that. If you look at the SPY, you can see here, below the 200-day moving average, I think we'll probably rally up to the 200-day, about 442.20. And anywhere from 438 to 442.20 should be resistance. And I would expect us to get rejected around that, in that area. All right, so that's the area I'd be looking for shorts to start to try to take some shorts. Let's go to the IWM small caps. This one has a really clean chart. So again, we did bounce off of that support. If you look at the daily chart here, back here in December, we had a little bit of reaction right there, and that's where we've stopped so far. It's kind of the only support level, from basically where we broke down at about 205 all the way down to 169.86. There's that one support level, and it's right there. So that's where we're finding our bounce. So we could bounce back up to, 205 all the way up to about 209. And this is the area I'd be looking to reshort for a move all the way down to 169.80, right in that range. Okay, so that's it. Again, it's right before the Fed, so I don't think anything's going to happen too important today. Let's look at gold. So gold has been, bigger picture. We started building bullish divergence really back here. All right, back here during March of 21. And you can see this low was a divergent low. And then we made another low right here, which was, you see the momentum, how it's just moving higher. So each one of these little dip downs making an equal low were divergent lows, meaning that the momentum is bullish and price should start to become bullish as well. Now, recently we've created this kind of triangle pattern like this. So everybody is waiting. All right, everybody's waiting for a breakout of the triangle. As far as I can, a lot of the channels I follow and everything, they don't know exactly which way to go, so they're all just waiting for the breakout, which, I think that's a conservative way to play it. With the divergences intact, the bullish divergences, I think we are going to get a break to the upside. Likely that's going to come on the Fed, but maybe what we'll see, and just keep this in mind, is after the Fed, gold might sell down to the support line here and then reverse and then do the breakout. All right, that is a possibility. Again, we're right there at key resistance, and it's right before the Fed, so we can't determine which way it's going to which way it's going to go maybe this week, but these divergences tell me that eventually we should break to the upside. Now, if gold breaks, we start to break higher. We've got some resistance up here at about 1962. 91, and then beyond that we've got the all-time highs at 2075 and really nothing beyond that. So I think if we're going to break above this 1963 area, we should hit the all-time highs and likely break beyond in the next coming months, or maybe it'll take a year or so for the next leg higher. I think we'll break, but maybe it'll run for another year higher. It's possible on the next leg. All right, that's good. And as I'm scrolling through all these sectors, I've noticed that most of these sectors are below the 200-day moving average. Here's the retail sector, below the 200-day moving average. This is utilities. Now this one is a defensive play, so it's right on the 200-day moving average. We'll see how that plays out. I think there's probably some more downside there. Consumer discretionary below the 200-day right there. Healthcare below the 200-day. Technology below the 200-day. Industrials below the 200-day. Financials are they're above the 200-day, so that's a point of strength. So we're going to want to watch financials for weakness. Energy above the 200-day. Energy is the strongest sector so far, and it's well above the 200-day right there. Here's some home builders below the 200-day. So again, a banking sector, very similar to XLF financials. So most of the sectors besides financials and energy are below the 200-day moving average. So that's a very weak condition of the market. So in general, I think the market's just taking a breather into the Fed, and we're going to continue selling. We're going to continue selling off after the Fed. Maybe not the day of the Fed. We could rally after the Fed, but I would expect selling to show up shortly thereafter. And we'll wrap up with GameStop. You'll see we're down another, 2%. This just continues lower. There's just complete weakness in this stock right now. So even if there's intraday rallies, that gets sold into, and ultimately we end up closing lower each and every day. So as far as I can tell, we are just continuing our drift lower down to $45. Again, there's no strength here because this was a retail meme stock that was bid up on call buying. Now that the market's corrected pretty hard and there's a lot of fear out there, there's likely not going to be a lot of strength in this stock. And so, we're looking for more selling on this one. Okay, Fed comes out tomorrow. They are expected to announce that they're going to hike rates in March, probably a quarter point, most likely rate hike in March. And I think they're pricing in another 4 rate hikes this year, most likely each one a quarter point. And they're not expected to do anything else besides that. If they hike tomorrow, then you would expect the market to continue to sell off. If they do not hike tomorrow and perhaps walk back some of their balance sheet roll-offs, or the talk about reducing their balance sheet, then the market will likely rally on that, seeing that as bullish dovish news, basically. And we probably at that point will rally up to some of our resistance points where we'll have good entries to reshort the market up at those resistance levels. Okay, so that's all I have. I'll probably put out a video tomorrow after the Fed meeting because there's likely not going to be much going on before the Fed meeting announcement. Thanks. Catch you on the next one.